Despite energy price spikes caused by the Iran war and persistently high inflation, the Federal Reserve has decided to hold interest rates steady at around 3.6%. It's the fifth straight meeting where the Fed left interest rates unchanged. Meanwhile, stocks tumbled with the Dow closing down over 1,000 points today. Let's take a look at our interactive stock market heat map brought to you by FinViz, which shows the top 500 stocks. A lot of red, some deep red there on the board. These were the highly anticipated tech earnings reports this week that's driving some of these results. Let's go to CBS News MoneyWatch correspondent Kelly O'Grady, who's at the New York Stock Exchange for us. Kelly, the vote was 9-3, and Fed Chair Kevin Warsh called it a good family fight. So how did the Fed come to this decision?
Yeah, I wonder when that family fight is going to turn into a Thanksgiving family blowout. Well, look, what he said was, you know, the mandate of keeping a full employment in the job market, that's still going pretty well. And yes, there's some inflation concerns, but it's not out of control. Here's a little bit of what he had to say explaining the decision.
The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability.
So, you know, you hear him straddling both sides of the Fed's mandate. That being said, you know, this was not a comfortable decision. 9-3, 3 people voted on that board to hike interest rates by 1/4 percentage point. And Warsh was really pressed that if we continue to see oil prices rise, energy prices rise, and then that continue to push inflation higher with all of this instability over in the Middle East, what are you gonna do, right? They've got another meeting in September, and he did not rule out a hike. He said, you know, there's gonna be a number of factors that go into this decision. He doesn't want to telegraph anything. The situation is changing very quickly. But I think that's part of what drove the market down. In addition to high oil prices, those tech earnings later, it was this trepidation that could we be looking at a September interest rate hike, especially because 3 people on that committee are already saying not if, but when.
So Kelly, what do we know, given the Fed's decision and all the information that you just laid out? What does that mean for the economy today and consumers? Is it kind of same old, same old?
So for right now, yes. When it comes to interest rates, because there was no change, you know, your borrowing costs, if you're going out and you're getting a loan at the bank, it doesn't change because that benchmark interest rate didn't change. That being said, I was tracking the bond market, the 10-year Treasury, and after that press conference, you actually started to see it tick up. And what does that tell you? That actually means that investors are betting on a September interest rate hike because the Treasury tracks, or the Treasury rate tracks where investors think inflation and therefore interest rates are going. Why is that important? Because that is what drives mortgage rates. And we're all out here going, when are mortgage rates going down? And so I think for consumers, you're not going to see mortgage rates come down anytime soon. They're either going to stay flat or even potentially elevate the back half of the year because of this consideration that there could be interest rate hikes coming. But in the very next few weeks, nothing really changes.
And Kelly, OpenAI CEO Sam Altman is in D.C. today meeting with Trump administration officials and lawmakers. Now, the day before his visit, though, more than 1,000 employees from the biggest AI companies, including OpenAI, urged the U.S. government to slow the pace of AI development until safety and security measures are firmly in place. CBS News caught up with Altman before his meetings. Take a listen to that.
What's your message to Congress today?
Oh, we're just here to preview a new model.
Did you see that open letter from the researchers across many companies calling you guys to pace progress?
I did, yeah.
And what's your reaction to that letter?
I mean, we agree on a lot of the principles of that. Many of our researchers signed it and were involved in drafting it. I think it's good to see.
Now, Kelly, these meetings come as all eyes are on tech companies and their spending on AI. So what do we expect from their earnings reports this week?
Yeah, well, you can expect the market to go like this. It always does around tech earnings, because you've got Meta, Microsoft, Amazon, and Apple, 4 of the biggest companies on the stock market, reporting over the next 24 hours or so. So 2 things I'm looking for. 1, how these companies are talking about how much they are spending on artificial intelligence development. That has caused investors a lot of concern over the past year or so, that you see these companies investing in data centers, investing in new technology, but not making money from it yet in a meaningful way. So that's going to be one thing that we're tracking. That's more of the immediate so what. Then there's the broader existential question, which gets at what Sam Altman was having to address in that open letter of, are we moving too quickly? Remember, OpenAI's model that was not released to the public yet was conducting an experiment, was conducting a test, and actually got out of the secure environment and went and hacked a real company on the open market. And that has really given a moment of pause of, oh wow, are we putting the cart before the horse here in terms of regulations and security? I think you're going to hear a lot of people, we have a lot of reporters on these calls that are always pressing the CEOs, the CFOs on a number of different questions. I think you're going to hear folks have to address that question, as well as the more immediate, how are you going to make money, Liz?
Kelly O'Grady, thanks so much.